Hey everybody, this is John, and it is Friday. It was really a strange week because there really wasn't any trend. It was, you can see here, 1, 2, 3, 4, 5. So up day, down day that turns up, down day that turns up. So it was actually a pretty tight range in the indexes and in Google. Now in Google, wow, it was actually a pretty decent rally in the close. So in Google, the idea this week in terms of there are times when it sets up very advantageously to focus on the higher implied volatility and sell premium. Okay, so Google set up as a nice income trade in terms of doing an iron condor. So if you look at this, then this was from the trade of the week. But the idea was we had decent premium, so we're able to sell. If I'm remembering correctly, it was like a 1.5 standard deviation iron condor, meaning that it was about an 85% chance of success. Sold it for $1.12, okay? And of course, collected all that money today as that premium kind of dropped into our accounts, all right? And that was, to me, what I found is that was the cleanest trades, and we did those in Tesla and a couple of other ones. Other positions were more difficult because you didn't get that grip. You didn't get that what I mean by that is a position that you want to be in for like a week or two. One day it's going in your favor, the next day it's going against you, the next day it's going in your favor. Okay, so what do you do in that kind of a situation? So for a stock that I'm bearish on Goldman Sachs. Okay, so we'll talk about the indexes here in a minute, but as I'm doing this, the S&Ps ended up 10 points today. They started off down pretty weak, but you kind of have the 9/11 is kind of the market kind of tends to not fall apart on 9/11 for obvious reasons. If there's a day when anybody's going to step in and buy it. But so if you look at Goldman Sachs here, here's my position has been adding bearish positions on weakness. Okay, so add it here. It looks pretty good, but then today we bounced, and it's good. The S&Ps are up 10 points. Goldman Sachs still down 69 cents on the day. That's good. There's a lot of support here, and what I'm looking at is that if we can take this out, okay, if we can take that support out, and there's just the idea that the markets at some point, I think, have a high probability of retesting the lows. But you can see here what the reason I'm doing this here. Well, you've got kind of a wedge. All right, this is a bearish pattern, and if we can take this out, I think we'll fall pretty quickly. So I bought some puts and sold some call credit spreads on Goldman Sachs. And so the question is, on something like this, do you sit through this, or do you try to trade the ebbs and flows? And the answer to that is you got to do both. Because if you're not positioned, in this case, for a down move, you're just going to miss it. When a down move like this happens, it happens like that. You're either positioned for it or you're not. So I like to do a little bit of both. It's like, wow, I'm positioned for a down move because the technicals are pointing down. There's a higher probability that there's a down move than an up move. Now, does it mean that we're guaranteed a down move? Of course not. But we're playing the probabilities. And then in the meantime, we can focus a little bit more on shorter term stuff, like a day or two. Okay, so how do we do that? So part of it is just being on top of kind of the market ebbs and flows. One of the things I'm going to talk about next week is what I like to know heads up when something's about to, we talk about ebbs and flows, right? But like here, if you wait for a squeeze to fire, you've already missed a lot of the move, okay? But we've put together some things like here that say, guess what? This thing is about to go, okay? And it allows you to kind of position in early, right? Same thing here. It's like, oh, there's red dots, and okay, it's about to go. And some other cool things with momentum where, hey, this thing's about to turn, right? And like today, there was a squeeze to the downside, but there's also some great tools that say, hey, this downside moves over and it's about to turn. So then you can just reverse and go long, okay? And that's part of growing your account, is being able to stay positioned for bigger moves, which in this case I still think are down, but then kind of catching these things too. And it's not necessarily, we talked about like layups and slam dunks. It's not that, because that's for an individual stock having an unusual volume day with a specific setup. I'm just talking about the markets in general. How do you stay on top of that? So I'm gonna be this class that I'm doing coming up on Saturday, next Saturday, not this Saturday. So Saturday, I think is the 19th. Yeah, there it is, right there. So the 19th. Essentially, at this point, it's having gone through this year, have had a great trading year, and it's really just kind of laying out like, look, these are the formulas that I'm using in all these different market conditions. These are the strategies that I'm using to get a heads up on this stuff. Okay. And the idea with this, at least the thing that I've seen people wrestle with the most, is that if you've got a strategy, like iron condors, it's great because they work 70% of the time, 95% of the time if you're doing 2 standard deviations. But if you are doing that at the wrong time, when the markets are sending very clear signals that you shouldn't be doing that, one bad trade can wipe out 20 profitable trades. And that's what I'm talking about here, is the idea of being able to build an equity curve up gradually, okay, with every once in a while like a big hit, by being able to identify what kind of market conditions you're in right now and then applying the best strategy to that market condition. Okay, so to that end, I'm going to be talking about this in depth on Saturday the 19th. For people that like to do kind of the hands-on stuff, I'm also going to do a 3-day online mentorship. And that actually includes the indicators that I'm going to introduce. This will actually include the Saturday class. And then for those of you that are like, all right, you're ready to kind of let the rubber hit the road, we have a Vegas workshop that's live coming up in November. And that includes this and this. Okay. To me, this is kind of like the markets have changed. Okay. I've been able to go through and identify all the setups that have not only worked good this year, but which ones have worked best in what market situations. I'm going to lay that out clearly, show you a couple new tools that I'm using. And I think that the rest of the year is going to be incredibly volatile. If you know what you're doing, it's going to be the opportunity to make more money in the shortest amount of time than you've ever experienced. Or if that is too stressful for you, to continue to be consistent in this environment. Okay, so anyway, that's what's going on. I think this is going to be an awesome class. You guys have a good rest of the weekend, and we'll see you at the next update.